Amazon announced it is laying off another 16,000 people across the company as it looks to trim bureaucracy. This comes just a few months after Amazon said in October it was laying off 14,000 people. To help us break it all down, I want to bring on Josh Beck, Managing Director of AI and Internet Cloud at Raymond James. Josh, welcome to the show. It's great to have you here.
Thank you for having me on today.
So we had Amazon CEO Andy Jassy on the show actually just last week. Our editor in chief, Jessica Lesson, sat down with him and we asked him about the layoffs that the company conducted in October. And I want to play the clip for you because I want to get your reaction to it right after.
Right now, I think that when we announced some role reductions, people assumed it was just AI because AI is kind of in the ethos of everything right now. And they just weren't AI. They were really about our culture. And for the longest time, I've been at Amazon 28 and a half years now. It has always been that we've
I like how
hired.
you're counting the half. I
I
don't
know.
often get that, but it's really
Yeah.
sticking through. Yeah.
It's always been that we've hired really strong, ambitious, customer-focused people who were owners, and those owners got to own the two-way door decisions, which are the overwhelming majority of decisions that we make. And just what happens as you get bigger. I mean, we had very unusual growth in our retail business and our AWS business and what we were doing in ads, and so I think very understandably we added a lot of people. And when you add a lot of people in a short period of time, you almost always choose to organize with a lot of different layers and managers, and it's kind of just makes it more digestible. But when you do so, you have unintended consequences, and some of which are that you end up taking ownership away from the owners. You've got the pre-meeting for the pre-meeting for the meeting. People don't show up with recommendations anymore because they know that the decision is going to get made 3 meetings later.
Yeah.
And you just, that's not how we want to operate. We, as a leadership team, want to be the world's largest startup. And we are very convicted about that. And where we see layers stripping ownership, we're going to try and take those layers away. And we're going to try and flatten it. And we want our owners to be able to own. And so wherever we see obstacles to being able to move fast and have owners feel ownership, we're going to do so. And that has nothing to do with AI. Over time, there may be certain job functions where AI is really helping, where you change your allocation of people, but that hasn't been the case really today.
So, Josh, that was, again, Andy Jassy last week in Davos. What did you make of the layoffs that they announced today and those comments that he made last week? I mean, are these just, making up for overhiring? Is it because of AI? What do you think?
Yeah, I think it's a great question. I think there's certainly a huge expansion in the workforce, and it's just what I would say more operational pruning. I don't really view it as a dramatic response to one challenge or the other, but bigger picture. Amazon's business with respect to AI cloud all of a sudden is much more competitively intense than the traditional cloud. And at the same time, shopping and particularly agentic shopping, you've seen a lot of announcements from Google, OpenAI, others, is also dramatically changing. So to me, to a little bit right the ship, kind of sharpen the organization as the competition is probably more intense than it has been for Amazon in the last decade, it is a smart move.
So you don't think this is necessarily to make room for all those investments in AI that the company is making, if I'm hearing you correctly?
They are certainly lagging. If you think about the metrics that we have around AI cloud, so that they mentioned they were at a multi-billion dollar run rate for Trainium. So I think that's the chips plus the revenue they're earning from Bedrock. But this is actually much smaller than what you would hear from Azure, from Google, Oracle, even CoreWeave. So they really have their work cut out for them. And that generally means you do need to invest and you need to focus, you need to shift your teams. This has been a theme really across tech. Certainly, you've seen Meta make big changes as well with respect to really sharpening their focus. So to me, it is creating the opportunity for them to invest, but it doesn't signal something kind of out of the ordinary in my view.
Do you think other tech companies follow suit?
It really depends. We've really judged all of these companies and written about them recently, particularly mega cap companies, with respect to their AI stack. And what does it look like? There are AI native companies. I think we all know they are doing quite well with their AI stack. And then there are these large internet conglomerates that are having to make a big shift in their business, probably bigger than it was with mobile, and they are having to reallocate their priorities. So you're seeing this take place at Meta. I would say that Meta has their work cut out for them to really establish maybe not the dominant number one or number two position in the model uh, evaluations and model benchmarks, but they need to be closer to the top. So they're certainly doing a reorganization. And Google had undergone something similar. Maybe it wasn't as high profile in the news, but did a large reorganization of their AI division and effectively gave the prior DeepMind CEO a lot more clout in bringing the product and commercial organizations together. So I think this is a trend within the mega cap tech. I think this is a big headline because it is such a big number. But in the grand scheme of Amazon, it's something like 1% of their total workforce, certainly much higher corporate wise. But I think this is a trend throughout mega cap tech.
And a trend that you think will keep coming. This will be a story in 2026. We will see these mega cap companies continue to lay off people.
In terms of future layoffs, so I think Google, for example, has done a very effective
Yeah,
reorganization. I
right.
think estimates are really too low with respect to their top line. So I think they have the capacity to invest without some type of big restructuring. Amazon is more of the catch up position. We kind of have this AI framework of laggard, tweener, and darling. We put kind of Amazon in the tweener category, so I certainly think they're a company that needs to ensue some large changes and really kind of improve their positioning. I would say Meta is in the same spot as well. I don't really know that they need to do something dramatic because the top line of their business is in such a good spot.
Right.
Their returns on the ad stack have been great, and so I don't think this is indicative of some huge round of layoffs to come in the year ahead.
So we've got Meta and Microsoft reporting today. Let's start with Meta. As you said, the top line growth has historically been very strong. What are you watching for and listening for on the call tonight with Mark Zuckerberg?
So in my discussion with investors, I think the expectations for the top line are quite high. Checks with advertising, excuse me, with advertising agencies has been very upbeat. Certainly, the holiday season generally was viewed as outperforming expectations. So I think really the focus will be what type of investment are they making in the business in 2026. And we really think that the level of investment of total expenses is probably going to be higher than what the street is expecting. The street is something closer to 150 billion. We think that's much more likely to be the lower end of the guidance. So you'll see them take their expenses up. Same with respect to capex. The street is closer to 110 billion. I think that's very much a low end. So I think the message will be higher investment because they are more in this tweener catch up position. And what evidence can they provide that they're going to improve their positioning with respect to the model, with respect to monetization? And that's really what I think people will be most focused on. And there has been certainly big developments in the last week or even weekend about this idea of agentic AI and really tying it into messaging. Certainly, Meta has an incredible platform with respect to WhatsApp and Messenger. So maybe we'll hear a new line or two in terms of what that opportunity means to them.
Which feature are you referring to there exactly?
There's been a number of developments that I think has generally made the attitude around agentic particularly this personal AI assistant idea. So originally it was called Claude and there was a rename to Moltbot. So
Moltbot,
this
yeah.
idea of a assistant that that can find you where you are within your messaging apps, go act on your behalf. Certainly, that has it's something of a demo, I would say at this point. But this idea of an agent acting on your behalf, I think, is a powerful one. And Meta does have a really good platform to distribute a product like this.
Right. Very quickly, we've also got Microsoft. Microsoft, we're obviously going to be watching the Azure growth rate. Other than that, what is the one number that you're going to be paying most attention to tonight?
So on our side, Andrew Merrick covers Microsoft,
Okay.
and
Okay.
I think his view is he's pretty optimistic on the Azure business. I
Right.
think there's a lot of focus on Copilot and whether it's really kind of gaining traction or not.
And what about Google? You upgraded the stock recently. What are you watching for there when they do report?
Yeah, so for Google, there's really two elements of the upgrade. So one is I think the search estimates are too low for 26 and 27. We think they're much more likely to be in the low teens. The street has that business decelerating to the high single digit rate. The primary reason for our optimism is we think the mix of AI overview and AI mode clicks is likely to go up pretty substantially. Those are much more valuable clicks. They have much higher conversion. So the cost per click, we think, will actually be a much bigger driver of growth than the street is expecting. So we think the narrative on search is likely to prove, and very similar with the cloud business. We actually think it can grow mid 40s next year, or sorry, in 2026. Uh, the street is at mid 30s. The primary reason is we think adoption of TPUs is really starting to ramp up. This has become a very popular inference type of chip and workload. And then we also think the momentum with Gemini API is also picking up. So we really think the momentum at Google Cloud is likely to be better than anticipated. And so when investors look at these stocks, if you are accelerating, then I certainly think it means you are becoming a winner or beneficiary in the AI race, and you can see multiple expansion in those scenarios.
Great. Well, Josh, I want to thank you for coming on. That is Josh Beck from Raymond James here on TI TV.